Hello, this is Roger Conrad, editor of Utility Forecaster, Canadian Edge, and the New World. I have a couple of things I want to discuss today. First of all, regards the general market, we now have first quarter reporting numbers in. Of course, we're already into the second quarter by about a week or so. But one thing we did notice in the first quarter was that quality has begun to count again. Basically, if you go back to the fall of Lehman Brothers, middle part of September last year, when the bear market really started to accelerate on the downside, people were throwing pretty much everything out the window. It really didn't matter if if an underlying company was solid or growing very rapidly, the stock was sold. People pretty much liquidated portfolios. Some of that was raising capital to cover margin debt elsewhere in accounts, particularly in the case of large funds. The end result, though, was that companies really, or stocks rather, across the board really lost heavily regardless of how strong the business was. And the tack we've had in the newsletters has been to stick with the quality companies regardless of what happens, on the premise that as things do recover, market conditions do improve, that quality would then again assert itself. And in fact, if market history, as we go back and look at market history, we see that companies that survive the underlying stress tests of every bear market have rallied and done quite well in the months afterwards, and as the recovery has unfolded. So far, the quality quotient part of things, it's been more a matter of not losing money or losing only a small amount, as opposed to double-digit losses in the major averages, which is what we saw in the first quarter. But again, that's a necessary first step, and quality again seems to be counting again. Investors are looking at quality stocks, attaching a higher value, maybe not panic selling them on the bad days in the market, and certainly that's a very welcome change from what we saw. Again, I don't know if this is a first sign of a major change in the overall marketplace, but it's certainly a very important straw in the wind for things going forward. If you have a company, again, that is measuring up in terms of earnings, and we have first quarter numbers coming out, much more difficult quarter, I think, than the fourth quarter of last year, or than any other quarter we've seen up to now. And the stress tests in this market were much more severe. A lot of sectors of the economy that had been surviving before had slowed down. So we are getting another chance to really reality check our portfolios. But again, if a company does well as a business here in the first quarter, the odds again improve that it'll continue to do well throughout this recession and bear market. And then again, when things do turn, it's going to head up, and I think that will be appreciated in the market. And so we saw that in the first quarter. I think going forward, quality is going to count, and those are the types of stocks that are going to do well. Let me turn to a more industry-specific item right now, and that would be a couple of things happening in government regards essential services. Obviously, essential services tend to be somewhat regulated, talking about things from energy, electricity, communications, water, tend to be more heavily regulated. The Obama administration in particular is now looking at a lot of things to change things in ways that some of the policymakers believe are needed. Of course, one of those areas is green energy. That was a big part of the budget. The major unresolved issue coming out of that is the cap and trade situation, or how do you regulate carbon? How do you reduce carbon emissions throughout the economy? There's a lot of competing ideas on that score, and of course it's still somewhat of a free-for-all. But one thing we have seen that has emerged, at least in terms of the politics, and I think, and again, purists may want to argue with this, but politics is probably going to be more important than science to what actually shapes a cap and trade. So what's our job here as investors? What are the politics? What's the actual legislation going to be shaped? Maybe not so much whatever the ideal may be. So again, focused on that narrow definition of politics, how this legislation might be shaped. The most important development, I think, has been the coalition of 15 senators and 50 representatives in the House and Senate of the U.S. Congress that have basically said we need to have a lengthy debate on this issue. There are obviously a lot of strong feelings on this in this area. Some people did want to have the cap and trade as just part of the 2010 budget, which would have enabled it to be passed without a 60 vote margin in the Senate, just a bare majority in both houses. That did not happen because of this blue dog coalition, if you will, of the 15 senators and 50 representatives. And a lot of these people were from states that would be heavily impacted by higher cost on coal burning power plants. Coal power plants account for about 50% of America's electricity, and a particularly high percentage in some of the areas of the country that can probably least afford a very big ratcheting up of taxes. So now or rather of taxes on carbon emissions, whether it's administered through a cap and trade system or through a flat tax on carbon. So you know the development that a power block has emerged to make sure these interests are represented, I think tilts odds much more strongly in favor of whatever comes down the pike being favorable to companies that are or considerably more favorable to companies that do have the coal the problem, or the problem of reducing emissions, that will be faced with a higher cost. Again, there's a lot of issues coming up, a lot of more debate to come. You know, the recession, the fact that the economy is weak, I think does play into the hands of this blue dog group trying to you know, lighten the load, or at least make something that reduces carbon without really putting a heavy burden on coal burning utilities and their customers. But again, a lot of ground to cover here. But that is something to keep in mind, particularly as we see some of the commentary coming out from the various research houses saying that coal utilities, those companies, are particularly vulnerable. I think, you know, what you really want to do right now, particularly in the context of a bear market where prices have been depressed across the board, is really take a look at these developments, and again, we'll keep you posted on them. You know, regards individual companies, look at what they're doing. There's a lot of water to go, a lot of developments to happen on this front. And again, what you don't want to do is get too carried away with some of the rhetoric. I do think that companies that are involved in solar energy, that are involved in wind energy, that are involved in geothermal energy, and one we just put up on our New World site, Ormat, a major player in the geothermal side. You know, I think these are fabulous investments right now. Prices are low. They've proven their ability to make it through the credit crunch, which is ongoing, unlike many of their smaller competitors. They have a lot of opportunities out there, and of course the Obama administration's on their side, and they're going to be winners regardless of how the carbon regulation does play out. But again, on the other side, you know, people always want to see, you know, winners and losers and this and that. I think it's going to be much more a matter of everybody being a winner, many more carrots attached. And again, that's a consequence of this political development, and that's really where I think the most important thing, important place to look is on this carbon regulation going forward. What are the politics? Again, this is how they're shaping out. The third item I wanted to mention, and again, this is another essential service industry, communications. There's a lot of talk about the broadband investment, the broadband stimulus and so forth, possibly being used by policymakers as a way to advance a long-cherished goal by a lot of people, particularly people that were in charge of communications policy back in the 1990s. And that is basically to promote a new group of competitors to the incumbent communications companies.